Thousands of State Farm insurance customers in California are bracing for the possibility that the company is raising rates. Some home insurance plans could go up to as much as 50%. This comes after the company announced it would no longer write homeowners policies last year, citing, quote, historic increases in construction costs and wildfire risk. We're joined by Karl Susman of Susman Insurance Agency. Thanks for joining us, Karl.
Thanks for having me.
Now, this affects homeowners, but also it could affect renters, right?
It is. If I can step back just for a moment, we've seen State Farm go through a lot of issues. In March, they were downgraded for their financial solvency by AM Best. Then in April, they non-renewed a little over 72,000 policies. And now, to your point, they have submitted a request for a 30% increase in homeowners premium, 36% increase for condominium owners, and 52% rate increase for renters policies.
Pretty steep. Now, how does this affect the integrity of the residential property insurance market?
It's definitely going to have an effect. The issue is right now when you have a company as large as State Farm that has the majority of the properties insured in California. I think last check was about 27% of all properties are insured in California with State Farm. When you have a company that's in that type of dire strait financially, I can't imagine how the Department of Insurance would not approve the rate increase, because remember, they have to show documentation to the Department of Insurance that they actually need this money, this increase, to be able to stay solvent. So what do? You're stuck between a rock and a hard place. Do you approve a rate increase that's this high, or do you risk letting the insurance company not have enough money to pay the claims?
Okay, so this points back to the financial state of State Farm. That's what you're saying?
Yes.
Okay, so, and you mentioned the California Department of Insurance has to approve the rate. You think that's likely to happen?
I don't see how they have much of a choice, because if they don't approve this rate, remember, they're going to be given documentation by State Farm that shows them in simple math, they need this money in order to stay solvent. So if the Department of Insurance looks at that and says, well, we understand you need that money, but we're not going to let you take that rate, they're all but telling consumers that hopefully there's not going to be a large enough event that State Farm has to pay, because they won't have the money to pay it.
Now, obviously, considering that there's inflation and, of course, higher costs of living in California, what's the solution here for homeowners?
I think the short-term solution is, unfortunately, we have to just keep grinning and bearing it, because we are all suffering. All insurance carriers are taking pretty significant increases.